Hello everyone, how's it going? Hope everyone's having a good day and a good trading week so far. Now, just thought I'd jump on here to do a quick video on a common question I get asked. Okay, so it's I don't have the luxury to jump on the 1 minute or the 2 minute or any sort of lower time frames to get these sniper entries. Okay, and this might be due to work or other commitments, and that's completely fine. Like right now, we're so focused on getting 15 seconds, 30 seconds sniper entries, and there's nothing wrong with that. Okay, but we have to understand not everyone's got that luxury to jump on those lower time frames and wait for confirmed trades. Okay, so I'm basically going to share with you guys 3 rules you can use on any time frames, but predominantly I'm going to basically stick with the 1 hour here. Okay, just to show you guys it works completely fine on the 1 hour or any other higher time frame. Okay. Before I get started, I just want to say this, right? So we have to make sure with trading, we have to make sure that trading fits into our lifestyle and not the other way around. Okay, so for example, if you are working and you don't have the luxury to jump down to the 2 minute or the 1 minute, then that's fine. Use the 1 hour, use the 4 hour. That's completely fine. Use a good systematic trading system and just apply it to the higher time frames. That's completely fine. Okay, so let me stop blabbing on and let's get started. Okay, so here's our 3 rules. Okay, rule number 1: as price taken out, liquidity. Okay, rule number 2: as price given us break in market structure. Rule number 3: as price left imbalance. Now you might know imbalance as gap or inefficient price action. Whatever it is, it's the same thing. So I'm just going to refer it to as imbalance or sometimes gap. Okay, and we will aim for 1 to 5. Okay, so this is it. This is literally our rules. Okay, and I'm going to be looking at dollar CAD. Okay, over the last couple of weeks and how you guys could have capitalized using literally just the 1 hour. Okay, now let's start from the left and move over. So right here, has price taken out liquidity? Yes. We then got our shift. But what we want is a breaker structure. We got a breaker structure. Okay. Now we need to see if price is left in balance. Price is left in balance. Okay. It's this candle. This is the supply zone which led to the break of structure. Okay. So we highlight that. This is our order block, point of interest, supply zone, whatever you want to call it. And that is our first trading area. Okay. So there's our short. Like 11 pip stop loss. And we absolutely smash our 5% target. Okay, I think we get down to more than 7%. Okay, so again, just to recap, we took out liquidity, price broke structure, price left in balance, and all we need to do is identify the candle that led to the breaking structure. Okay, now after that, what can we see? We can see here, price took out this liquidity, price then broke structure, price has also left this imbalance. Okay, and this is the last candle where buying was done, which led to the breaker structure. So we take that trade. What do we see? We have like a 18.5 pip stop loss, but we don't get our 5%. We take a loss there. Okay. Now, bear in mind, any trading strategy you do, you will take losses. Okay. So I don't want to sugarcoat this. So this would have been a trade which fits the rules and would have took the loss. Okay. Now, what can we see? We took out liquidity and we broke structure. And we left this gap. Okay, imbalance. Completely fine. So we have this last down candle. We have this demand zone which broke structure. Okay. Now notice price doesn't come back to it straight away. Okay, so I'm just going to leave this here, okay, for later on. Then we continue to do our detective work. We can see price take out liquidity. Now these are equal lows, okay, relatively equal lows. Now once you train your eye to see this on the 1 hour or the 4 hour, whatever it is, you won't need to scale down. But for just education purposes, I'm just going to scale down to the 15-minute just to show you guys how it looks. Okay, so we've got relatively equal lows here. Okay, price grabs that liquidity. Okay, grabs that liquidity and then breaks structure. So back to the 1 hour. So price grabs that liquidity, break structure. Now we just need to identify imbalance. Now this probably doesn't look like there's much imbalance there, right? But I'm going to do a video on imbalance, and we need to understand imbalance could be this big, okay, or it can be this small, okay. It doesn't matter as long as there's imbalance. It needs to get filled, okay. So if you look at here, the low of that candle is 378, and if you look at here, the high of the candle is 375. So there's about 3 pip imbalance there, okay. And we just need to identify the demand, which broke structure, which is right here. And sorry guys, my video had cut off. So just to start where we left off, we had an identified liquidity grab here, followed by a breaking structure, followed by a tiny bit of imbalance left here. Okay, so what we now need to identify is the last down candle, which is right here. And we basically take our trade from that region, like a 21 pip stop loss. Let's see if we meet our target. We get to about 4.6%. Okay, so we don't quite meet our target. Completely fine. Our targets are 5%. Now, obviously, feel free to change these targets, according to your risk appetite, according to, what you guys want to achieve. I'm just going to stick with 5%. Okay, so then we need to see if this broke structure. It didn't break structure. We then have a liquidity grab, which went on to break structure. And we have this last down candle before that move, which left imbalance as well. Okay, now we need to, here's a little tip. Just because price mitigates something, okay, price can still come down to mitigate the 50% or the full candle. Okay, and especially when there's still imbalance left, it makes sense for price to come down. Now if I take the rectangle and draw off the last down candle, okay, we can see price, after we broke, we didn't really come down, right? But this all looks efficient, okay, but we can't just leave it at that because we've got inefficient price action here. We've got our imbalance here. Okay, so price took out liquidity, price left imbalance, price broke structure. It meets all our rules. Okay, now here's a little entry tip. Okay, going off the 50% of the order block. Look how perfectly it mitigates the 50% of the order block, okay, to fill in some of this imbalance, right? So then we take our trade from the 50% with like we can put it below this wick if you want, but really you just need to account for the order block. So let's just say 14.7 pip stop loss, and we hit our 5%. Okay, we hit our 5%. So then remember I have this left here. Okay, and this was a valid area because it took out liquidity and it broke structure and it left imbalance. Now look at what's happened. Okay, in all this move up, what price has been doing is creating nice trendline liquidity to come back in to our level. So this could be a great trade following our rules. Okay, now does it quite hit target yet? It does. Okay, hit 5%. Okay, So we had one trade, we hit 5%. We had a loss. We had a trade which didn't hit 5%, and we had a couple more which hit 5%. Okay, so just staying consistent, systematic, having a set rules, and just follow it through. Just follow it through. Okay, so this is strictly on the 1 hour. Okay, now the more you guys spend time on the chart, you'll notice these things as equal lows on the lower time frames, etc. And this is what I mean. You don't need to scale down to the 1 minute, 2 minute, okay, to become consistent. Okay, let me see, just jump up to the 4 hour here. Okay, and remember, this is one pair. Okay, this is just one pair. Okay, so as soon as I see this, I can see price took out liquidity. Okay, we got a little bit of a shift. So our first rule, price takes out liquidity. Okay, we then break structure. Okay, we have left imbalance. Now, which is the supply zone here? That broke structure right here. Price then comes back to mitigate it. Okay, the more you go along, you understand more about inducement. So this is like an additional confluence. Now I'll talk about inducement in another video, but this is an additional confluence whereby we can really expect this point of interest to be holding. Okay, and I'm pretty sure, just looking at this hit 5%. Okay, so that's it. Simply just use those 3 rules. Has price taken out liquidity? Has price broken structure? Has price left imbalance? Okay, and if you're busy with work, if you're busy with other commitments, you don't need to scale down to the 1 minute, 2 minute. Okay, stay on the higher time frames, no problem. You don't need to get these sniper entries on the lower time frames to be profitable. Okay, so guys, that's it for me today. If you guys enjoyed the content and would like more of this content, please do give this video a like and a share. And if you could also subscribe to my channel, that would be highly appreciated. So until next time, remember, it's not all about the facts. It's about how you perceive those facts. Build your own story.